Hey everyone, and welcome back to the channel. Today, we're rediving deep into some massive news that has been shaking up the entertainment world and sending ripples through the stock market. We're talking about Warner Brothers, Discovery, WBD, and how their stock just rocketed to a 52-week high. This isn't just a small bump. It's a huge surge driven by some seriously exciting strategic moves. So grab your popcorn, because we're about to break down exactly what's happening, what it means for the company, and why analysts are buzzing about its future. Now, you might have heard some whispers, but on Tuesday, Warner Brothers. Discovery officially announced that its board of directors is launching a review of strategic alternatives to maximize shareholder value. And let me tell you, the market reacted instantly. WBD shares popped, soaring to their highest point in a year. This announcement didn't come out of nowhere. It followed weeks of intense deal chatter surrounding this Hollywood giant, especially with CEO David Zaslav at the helm. And it conveniently dropped just before Netflix's crucial third quarter earnings report. So, what exactly are these strategic alternatives they're reviewing? While WBD mentioned receiving unsolicited interests from multiple parties, this isn't just one company knocking on their door. It's a whole lineup. The options on the table are pretty broad. They could stick with their original plan of a planned split and spin-off, or they could consider a transaction for the entire company. Imagine that the whole WBD empire being acquired, but wait, there's more. They're also looking at separate transactions for its Warner Brothers and or Discovery Global businesses, meaning parts of the company could be sold off individually. And there's even an intriguing option of an alternative separation structure that would enable a merger of Warner Brothers and spin-off of Discovery Global to our shareholders. Lots of possibilities, right? WBD has made it clear that there's no fixed timeline for this strategic review, which gives them plenty of room to explore all their options thoroughly. CEO David Zaslav himself put it perfectly, saying, "It is no surprise that the significant value of our portfolio is receiving increased recognition by others in the market." He knows what they've got, and now everyone else is starting to see it too. Let's talk about the market's reaction specifically. On the day of the announcement, WBD stock was up over 10% at one point, hitting $20.29. This momentum is huge for investors, and it shows just how much confidence this news has instilled. And it wasn't just WBD soaring. Netflix also hit a 52-week high of $20.58. In early trading, showing a general positive sentiment in the media sector, perhaps in anticipation of what these big moves from WBD could signify for the industry as a whole. Now, what are the experts saying about all this? Well, analysts are definitely weighing in. Doug Kreutz from TD Cowen, for example, views the announcement as somewhat of a formality, noting that news reports had already hinted at WBD being in discussions with multiple parties. He shared his insights in a reaction note, suggesting that a transaction with Paramount Skeetons is reasonably likely. However, he's a bit more skeptical that other, more attractive bidders will emerge. His current rating on WBD is a hold with a $14 price target, so he's keeping a watchful eye on developments. But not all analysts are as cautious. Matthew Harrigan from Benchmark is much more bullish. He actually boosted his stock price target on WBD from $18 to a whopping $25 following Tuesday's announcement. That's a significant jump. Harrigan sees substantial value here, believing that even with the morning's 10% price advance, WBD stock has a plausible, sustainable higher single-digit or better free cash flow yield post-2025. He believes that pushing the realization of this value to 2026 makes the $25 valuation entirely reasonable. Harrigan and his colleague Daniel Carnoza are particularly bullish on the idea of David Ellison's Paramount Skydance acquiring WBD, believe this combination offers the best strategic value and has a high likelihood of regulatory approval. This is key because any massive deal like this needs the green light from regulators. They also point out that other potential suitors like Apple, Amazon, or even Comcast would likely face transactional friction from the current administration due to antitrust concerns. And Netflix co-CEO Greg Peters has already expressed disinterest, so that takes them out of the running. This really narrows down the field and makes Paramount Skydance look like a very strong contender. Harrigan also sees benefits in a deal happening before WBD's planned separation. He explains that a nearer-term bid is likely less expensive than a post-separation takeout, especially considering the potential momentum for Warner Bros., Studio, and HBO Max after a separation. Plus, a post-separation deal could face a further 12-month timing lag due to tax implications. So, from an investment perspective, a quick pre-separation acquisition could be a smarter and more cost-effective move for an acquirer. Let's not forget Guggenheim analyst Michael Morris, who earlier this month raised his WBD stock price target by $8 and maintained his buy rating. He notes that investor discussions are primarily focused on whether there will be a total company bid or if they LL stick to the planned 2026 business separation. Maurice anticipates further consolidation is possible in the industry and believes investors will continue to use asset value as a primary basis for share price targets. Because of this, he's updated his valuation approach to a sum of the parts methodology, which gives him a $22 12-month target, a significant increase from his prior $14 target. So, what does all this mean for us, the viewers and potential investors? Well, it signals a very dynamic period for Warner Brothers Discovery. The company is clearly exploring all avenues to unlock and maximize its incredible value, whether it's a full acquisition, a strategic sale of parts, or a new separation structure. Big changes are on the horizon. This could lead to a stronger, more streamlined, and more valuable entertainment powerhouse. For shareholders, this kind of strategic review, especially when met with such positive market reaction, can be incredibly exciting. It suggests that the company is actively working to enhance returns and capitalize on its vast portfolio of beloved brands and content. The buzz around WBD isn't just about stock prices. It's about the future of media and entertainment. These kinds of mergers and acquisitions reshape the landscape, influencing everything from the content we see on our screens to the way major studios operate. As these discussions unfold, it'll be fascinating to watch which direction WBD ultimately takes and how it impacts the broader industry. The fact that the company is proactively seeking to maximize shareholder value shows a strong commitment to its investors and its future growth. It's a bold move, and it's certainly gotten everyone's attention. So there you have it, a deep dive into the exciting developments at Warner Brothers Discovery. This is a story that's still unfolding, and we'll be keeping a very close eye on it. It's a testament to the enduring value of great content and strong brands in an ever-evolving media landscape. Thank you so much for watching today's video. I hope this breakdown was helpful and insightful for you. If you enjoyed this content and want to stay updated on all the latest financial and entertainment news, please hit that like button, subscribe to the channel, and ring that notification bell so you don't miss any of our future uploads. We love hearing from you, so leave your thoughts and questions in the comments section below. Until next time, happy investing, and I'll see you in the next one.